Hello everybody and welcome to the Happy Dystopian. I'm here again with Ferdi. Ferdi, how are you doing?
Hey everybody, hi Midas, thanks again for having me on. I'm doing well. Saying this in the new year 2022, new opportunities, new chances for everyone, so it's good to be back. It's been a long time since our last session.
Absolutely.
A lot has changed by now.
Yeah, so happy new year.
You as well, to the viewers as well.
Yes, absolutely.
Best of wishes.
So a lot has changed, but also it hasn't gotten less interesting, I think.
Definitely not, right? So here we are, like about 9 months after we had our first session.
Yeah, I think so. Yeah.
Talking about inflation coming up, and now, of course, the numbers for 2021 are settled, and it's been beyond, well, at least my expectations at the beginning of last year. So now we're in stage 2. Inflation is here, and everyone is panicking.
Yeah, I think we have definitely been ahead of the curve on that one. And I'm actually discussing it a lot with other friends, and they're saying, okay, anytime inflation comes up, I'm thinking of you because you were already talking about it like half a year ago.
The harbor of inflation, and well, the signs were obvious to us, of course, but it just goes to prove that people need to see the numbers in reality before they believe any of it. And well, the numbers have been presented now. We're still, I believe, in this sort of shock phase, you know, where we're hearing about inflation is now the highest in 40 years, but what does it really mean? That's not yet clear to most people.
It's such a long period. Even the euro, for instance, it hasn't been there for that period. So
it's never have had this kind of inflation, of course. So the ECB is I've read some articles and they made the fair point. You know, there is no economist or financial expert which is still working, which has also, you know, encountered such a situation of 7% inflation, because they're all retired by now.
Yeah.
And it's an entirely new situation as well. So a very interesting stage, right?
Yeah, I've actually been reading a new book yesterday. It's called When Money Dies by Adam Ferguson. And the book was actually written in 1975 because in that time there was also a lot of inflation and it was also sort of new to people.
Yeah.
And in the book he describes the history of the hyperinflation in Germany after the First World War.
Right.
So he actually published it as like a warning in the 1970s. And of course then a lot of measures were taken to curtail the inflation, but I think now this book has become very top of mind again in the 21st century.
Circle repeating over and over. Maybe this time we are at the edge, and who knows what's in store for us, right? In the coming months, in the coming year, especially with all the asset prices. I feel like right now everyone is very angsty, you know, and they don't know what's going to happen because of the inflation. People are still refusing to talk about interest rate hikes in Europe. So what's going to happen at the end of the year, right? Do you think inflation will be the same level or even higher or lower?
Yeah, well, for sure, if the policy doesn't change, it will just continue to become higher, notwithstanding some external shocks, you know, to the supply chain. But in general, if you keep the printing press running, then the value of money will decrease. But I think we already touched upon this before, but there's a big rift between the US and Europe.
Yeah.
In the US, they're already taking measures to curtail the inflation, possible rate hikes coming up soon.
Yeah, the rift is really expanding right now, right? Especially in the public eye.
Exactly, and that is also an interesting situation. What if the European Union, the Eurozone continues to expand the money supply, and the US is going to curtail it? Are we going to see some serious movements with the dollar gaining towards vis-a-vis the euro?
Right, yeah. Eventually that's the fear, of course. I must say in these times it's also uncertain, so even the Fed, maybe they'll have to up their game in a few months, you know, and do even larger rate hikes. But it is very telling, of course, that we're still not talking about it at all. And in the public discourse, the inflation level isn't really associated with the current level of interest. Well, of course it should be,
Yes.
as we have said very many times. So I still think that in order for that capital flight to really occur, then people need to be aware that it's also due to the policy parameters of the central bank in Europe. But that awareness is not yet here, so I think before that really happens and before the actual rate hikes, happen, we're not going to see that much of it. But of course, also in Europe, the real interest rates in the market are already rising,
Of course,
because
yeah.
of what the Federal Reserve is doing, and eventually we have to follow suit, of course.
Yeah, you need to be competitive to attract more investments. On the other hand, what if we do not follow suit and we continue to have this accommodative environment in the Eurozone, while in the US...
it's a simple formula, I think. It can be distilled down to a simple comparison, and that's that a large part of money wants safe investments, even if that means lower returns. But of course, when the returns are so low, they will eventually go to riskier investments. If the US increases the rate hikes, then safer investments will become more profitable on
Yes.
average, because the supply of money draws back and riskier investments are less popular for investors. So if I was someone managing $100 million, I was going to, especially in these uncertain times, right? I would definitely move my money away from Europe, where everyone is chasing returns on like crazy green projects and stuff which don't have any profitability in the long run. I would move my money to the US and buy treasury bonds there. If that's 1% interest, that's better than risking it all here. So that's what's going to happen. There's a difference in rewarding risk. In the US, risk won't be priced as high, and everyone will just move into the US because their money is safer there for the same return. That's the risk, and I think once that's going to happen, then the ECB will have to also give investors in Europe a chance to chase those returns in safe investments. But how that's going to unfold, and if that's going to unfold this year, such a capital flight effect, I'm not sure. We'll first have to see the first rate hike.
Yeah, absolutely. Well, it will open up an entirely new asset class, which is almost out of the picture. When I was studying finance about 10 years ago, they were always saying, okay, you need to put something in stocks, something in the bonds. But as the bonds have not had any returns for many years, that asset class has been out of scope for many people.
Yeah, especially in the public eye, it's not been considered at all, because it has mostly negative returns in the US and in Europe for the longer bonds.
It's interesting for perhaps pension funds or institutional investors, but for retail investors, it has not been part of the scope.
And our parents, they had like a 4% return or something on those bonds. Then it's a very nice way to put aside some money and be sure it's a safe investment and be sure that you'll get that return. But for us right now, no way.
Yeah,
and I don't think that a few interest rate hikes are going to make that possible again. Because that would just crash the economy, right? If people could invest in bonds for 4%, I think a lot of people would take that chance. And a lot of people that are now in stocks, if they can just hold their money for 4% a year, that's what banks were for before the zero interest rate policy. So if we see a situation where that's possible again, it's going to be mayhem. And so many particular investors right now, right? Just you and me through the Giro and other apps, just putting thousands of euros in. Well, if you would get 4% on your savings account, you would consider a huge chunk of those investments back to your savings
Possibly,
account. A lot of people would, because it's safer in the end, right? It feels safer in any case. Sure, the exchange might always go up over a 10-year period, but people want the feeling of security with the money in their bank account just growing steadily, but that's not impossible.
Yeah, so the European Central Bank is also well aware of this. So in their last press conference, they stated, okay, if we rate the hikes, the risk is that the value of stocks will go down. I was personally actually a bit shocked by that, because I was thinking, okay, the ECB, it's a public institution, they should be concerned about
The public.
the public, and the governments, and stock holdings are for
Yeah.
most
Smart.
regular people not that important, or am I missing something?
Well,
here?
I guess they seem to be that important, and if you look back at the past 20 years with an honest look, you can understand why, because it's also been driving so much growth, economic growth and investment, that I can understand they're nervous about a real stock market collapse, and not because of what happened in the early months of Corona, where people are just very uncertain about what's going to happen and pull their money back. Now this would be people choose an alternative,
Yes.
an alternative investment that's not related to the exchange. So yeah, if only 5% of all stock owners start to sell at the current price, it
Mhm.
will go down more than 5% because yeah, it's supply and demand. So if you dump a lot on the market, it will crash. So even 0.5% interest rate increase, it only has to scare off a small amount of capital
Yes.
in order for it to collapse for more than the capital that left. So yeah, it's a valuation, right?
But from a society point of view, imagine that there is a big correction in the stock market and it loses about 50%, somewhere in that order of magnitude. What would be the impact on the society? Because I'm not yet seeing that clearly.
Yeah, who knows, right? I think the valuations have increased so much that it's hard to say what really the damage could be if they draw back a bit, because in the end, if it totally evens out, right? And it will still be like a growing line compared to 20 years ago, even if it crashes for 50%.
Yeah, absolutely.
That
Yeah.
would still work. But the question is, how much did they use their current valuations to invest here and to buy Activision Blizzard, for instance, for 70 billion?
Yeah, amazing. It's the GDP of Bulgaria. It's
Right.
exactly the same as.
And their yearly profit isn't even close to 70 billion of entire Microsoft.
No, nowhere
So
near.
it's really weird that these purchases are possible, but it's basically only possible because of the valuation and because people are willing to finance it, stockholders.
I think the biggest risk, perhaps, of a stock market crash would be the fallout that it would have in terms of the perception of people. That they would think, okay, the economy is not doing that well, so perhaps I'm not going to buy a new car, I'm going to save my money, and of course, that would have a big impact on many companies.
Yeah, definitely. And there would be so many defaults, right? 2 years in a row now, there's been a historically low number of defaults because of the financing. So if then the stocks also crash and people stop buying, then it's the end for so many companies. Unfortunately, that's probably the healthy approach,
Yes.
to shed off all the near-death companies that should have bankrupted 2 years ago. But that's the risk, because then the economic hit of the past 2 years is going to fall.
Yes,
That's the
and,
fear, right?
And if companies go bust, then a lot of people will become unemployed, and for some that's a very scary prospect, depending on your position in the market.
For national governments, for one.
Absolutely, yeah.
I mean, they're already so, well, I'm not going to say the F word, but I would if there wasn't a mic here, so effed on their finance that some interest rates from Europe, the central bank, would already wreck their finance, let alone the number of people that would enter unemployment because of those defaults.
Spending would go up, tax incomes will go down.
The classic economic theory. And that's, I think, a domino effect that they're trying to prevent. But it's just getting expensive, more and more expensive, because all these companies should have bankrupted by natural standards. But we're just keeping them up with financing. So once reality hits, it's going to be harder than before, because it accumulates more and more companies that should have been offed, but are still up due to subsidies, for which there's no economic production as a counterpart. So It's all smoke.
So one further topic, governments in multiple high income countries, the US, Japan, Eurozone, they're discussing whether to raise the interest rates, yes or no. On the other hand, the People's Bank of China has actually lowered their rates. Have you been following that as well?
Yeah, right. So Erdogan has also announced that he's lowering the rates again.
Yes. Yeah.
So it's, I think in these countries it's very obvious that it's gone on too far with really low interest rates. because any increase like they did in Turkey or like they tried in China, it just leads to these huge problems that nobody has a solution for, like Evergrande. You know, people say it hasn't defaulted, but they're pretty much just dissecting the entire company while not saying it's in default. Also, just a symptom of the huge amount of finance available for China in the real estate market, and they can't escape from it anymore because that wealth, that fictional wealth that they built, is going to collapse when you raise the interest rates. But they kind of knew that all along, of course. But it's easy to do when you're the one reaping the benefits.
Yes.
And then 20 years later, when it's really not working anymore, you can't pop the bubble because that would kill you politically. And I think that's also really important in Europe, and a reason why we aren't so keen on raising the interest rate is, you know, the political background, and that the damage from such a rate hike would be very different per country in the EU, which would lead, you know, to all kinds of political unrest.
And per person as well. For some people, it will be if you are like now in a really good job, and it's not that easy to find another one for you, then of course you are going to be very concerned to any economic shocks. Just one example.
Yeah, for sure, and because it's been so long, and because we're in such a unique situation, like with the inflation, it's the uncertainty that also damages a lot, right? Like you said earlier, I'm just gonna hold off on purchases because, you know, I may buy a car, but then the Volvo goes bankrupt in a few months and my car will never be delivered. That kind of uncertainty can really damage the economy.
Yeah, or you lose your own job and you're no longer able to afford that car, so you lose your savings.
Yeah, and you have to, you know, return it, and you have problems paying rent, and if you have such a world for like 1 year, I think the unrest in every country is going to be pretty big, because that's one thing that I've not heard yet. I've said it before today. We're talking about inflation, but not about inflation and 0% interest at the same time. Well, that's the real danger, right? It's just you're being set on fire from two sides.
From two sides, yes, absolutely.
And that's a unique occurrence in history.
Yeah, so just to go back a bit to the situation of Germany in the 1920s, what happened there, and it's similar to what is happening now, that people were not really aware that their Deutschmark was losing its value, but they were just aware that everything became more expensive. So the food and the groceries were becoming more expensive, so people were asking for higher wages to meet those expenses, and those higher wages were financed through the printing press. So in the end it was a vicious cycle which was impossible to escape.
And we see that now here as well, right? So that's the real danger, that now that we've had 7% inflation and a lot of employers are promising we're going to compensate, you know, be it 5 or 6%. Well, if all that's going to be spent instead of saved up, then next year they'll have to do it again. So in reality, there's been a small decline, right, in purchasing power, because they may be compensated now, coming year, but the inflation has eaten all that up already.
Yeah, exactly. I mean, you can compensate like at the beginning of the year, but it doesn't take care of what happens in the coming months.
Right, and because you're raising the wages, no matter how good it is, and it's necessary for some, it's going to increase and throw oil on the fire for inflation, of course.
Yeah.
Because people will just buy more.
More euros chasing the same amount of goods.
And they all have the new inflation mindset, which is, well, money's going to devalue at around 10% a year, so I don't want any of it. And only interest rate hikes can really stop it, but it will damage the economy, of course.
Now we're talking about interest rate hikes and stock prices, and I think it's all quite technical and for many people a bit abstract, you know? But then we really need to think about what practical effects are these going to have on people's lives. So just to get back to Germany for a bit, so actually their inflation problem already started in 1914 at the beginning of World War I. So while in other countries such as Britain, they raised taxes to pay for the war effort. And in Germany they didn't do that. So they just borrowed the money to pay for the war, which meant that the mark was losing a lot of value every year. which had also a big impact on the morale of the German troops. So when they would come home on furlough from their time at the front, they would notice that their nominal wages as soldiers, which stayed the same, had a lot less purchasing power.
Yeah.
So they were thinking, okay, if I'm going to continue in my current position, my
wages.
family is going to be very poor after the war. Well, if I would be now working in one of these sectors which have flexible wages, then it would be far better off.
Yeah.
So the inflation, it's sapping away at the morale, and it's disincentivizing people from continuing
definitely.
on a fixed income.
Yeah, because we as a society, we consider money, the reward for our productivity, as
Exactly.
it were. So if we start noticing that it's suddenly losing its value, even though you're still producing the same amount, that's going to cause a panic, of course. And I think that's totally the case here as well.
Absolutely, yeah, with all the people walking out of their jobs, like, okay, now I have a fixed sum every month. Well, it's becoming less and less, so maybe I should either change jobs or start my own business, because in this way I'm only getting poorer.
That's what people are doing. I think that the number of companies that were created in the past year is also uniquely high, because people are done with being on the last chain of income, where they are the marginal factor.
You're always playing catch up to the monetary expansion.
And your employer is always trying to save money on you because you're the most expensive factor in his business, probably. So I think a lot of people have woken up from that illusion that you'll be safe if you just work and aren't stupid with your money. Even though for now, if you've worked and saved up a nice amount, you have to put it on the exchange or you're not getting anything back, and it's just going to devalue.
But they have woken up from one illusion, but they've entered new illusions.
Well, I think they've entered a new fear now, the fear of inflation, because nobody here has experienced real inflation. So everybody now is, how do I hedge my money against inflation? And the funny thing, I read the back of the book that you mentioned. It said, they were going back to a barter economy, because money doesn't have value anymore. And I tell to people who ask me, how should you hedge inflation? Well, the only thing that's really useful is physical goods that are durable, because you can buy them at a lower price now, they will retain their function and quality over time, and they will naturally be worth more as long as it's a functional good that's high in demand. So that's the only... like a house.
Yeah, but I mean, a lot of people are trying to buy these houses.
Exactly. And cars, and gold and silver are, of course, the prime example of a physical good that doesn't lose its value.
Yeah, but which is not productive at the same time.
No, of course, gold has a certain application, but it's not traded as a productive material in that sense. But that's why I think it's better if you find new markets of physical goods, like computer video cards. If you bought them 4 years ago, then you can sell them for twice the price now, which is because the physical goods are getting more and more expensive to produce.
Yeah, absolutely. But you see people being squeezed out of a lot of markets. So I remember 2 years ago they were having articles in newspaper like, okay, here you can still buy a house on a normal income. And right now the articles are, okay, here you can still buy a house if you have double the normal income. Yeah. And there are even articles that say, okay, but a second-hand car, it's no longer affordable on a for the average Joe. I mean, it's a serious change in your life circumstances, right? For many people.
You have to adapt, right? It's no longer a promise that you'll be able to buy a house and a car on a normal wage.
Yeah.
But that's just the result of
So people are quitting their jobs, trying to make money anyway, going into the cryptocurrency.
Right.
And this is one asset class which has already crashed in the last months, and the analysis I read was that because of the expectation of rate hikes, people are already getting out of this speculative class.
Yeah.
Do you think that's correct?
Exactly. Yeah, totally. I think, like we talked about before, the returns on safe investments are low, So people are going to look for other opportunities where the possible returns are high, even if it brings risk, because we've been taught since 2008 that risk doesn't really mean anything, because we can just build the banks or whatever out, whichever entity is in problem, we can just build them out.
Yeah, they're too big to fail, so they will always be safe.
So the risk on which they are punished will just take the punishment away somehow. So yeah, that attitude has gone through everyone, and everyone that's a bit keen on getting high returns is going to look at crypto, because the returns are of course really big, even now.
Before they were, but right now they are really in the doldrums.
But if you look at it in like a 10-year line, it's still way up, you know.
That's true.
And a lot of people, they are believing in that dream. Like if I look in another 10 years, it will have made the same surge, as it were. But of course, that's foolish to a large extent, because it's such a risky market.
Yeah, it's incredible that like just regular people with a normal job are now incentivized to take enormous risks, because
with their savings, hard earned.
Yeah, I mean, just doing your job and being sort of prudent, that's not going to cut it anymore.
Yeah, we now have ads on TV, right? They don't even make any sense or try to tell you why, but they just say invest in Bitcoin.
Yeah. And don't be the last one not to invest.
Yeah, right. This is the moment. Invest now. But not because Bitcoin is great or anything, just because they know that the person's watching associated with Bitcoin. Oh, that's 1,000% gains, right? Yeah, I'll invest in that. It's a Ponzi scheme in this aspect, and everyone knows it, but still it's so popular. And that should say a lot about our financial conditions, that people are willing to do that, right?
And just one more example from the 1920s, because I just started the book, but it's so fascinating. At some point, one of the main economists in the German banks also says, like, okay, we're in a really weird situation where every person I know is speculating with foreign reserves.
Yeah.
You know, so before that, I mean, regular people would just have their savings, but now everybody is forced to become a speculator.
Yeah, to not hold the cash in their own currency, and it's the same here, of course. If you have cash is trash, right? It's always the pendulum between cash is king and cash is trash.
Yes.
Well, if the inflation is high and the interest rate is low, cash is way trash. So they're going to put it in everything.
But you're taking a huge risk, because once they normalize the rent or the interest rate policy, then cash is king again, because then you will be able to buy all these assets which have now been inflated. So it's
then the problem becomes how many people have gone on for the ride, and are monetary leaders strong enough to do an interest rate hike?
You're gonna have to make a trade-off, and whatever you choose, the impact is gonna be very unfair.
Very large.
Large and unfair as well.
Yeah.
Some people are going to lose a lot or gain a lot depending on these decisions. So it's not an easy decision by any means.
No, and it's easier to not act. So it's easier to continue in the current trajectory and not deviate from the past 10 years. So for now, it seems like that's the way we're following. You know, just not doing anything. Maybe scaling down these purchasing programs, but the public doesn't look at the purchasing programs. Interest rate is the only parameter that they might be affected by.
Yeah.
So, and that's not happening. So let's see next year December. If it's 7% again, that means like compounded inflation is like 18% in 2 years.
Yeah, I personally hope they make these interest rate hikes very soon and just go back to normal as soon as possible. But I'm not sure if that's going to happen.
I think last summer was the best moment to do it, but they've not done it because Corona was still an issue, I guess. It's true to some aspects, but at one point, you have to think about bigger problems, which is the economic illusion we've been under the past 2 years. We have to dispel it eventually.
One area of inflation which has been really top of mind is the energy costs and the natural gas for heating the homes, especially in these colder months.
Yeah.
And right now there's a lot of discussion at the EU level, like, okay, we want to go green, but what is green?
Yeah.
And the French are saying, nuclear is green, and the Germans are saying natural gas is green, and the Dutch are saying, no, neither is green. It's a very important discussion with a huge impact. It's
Yeah.
very complicated.
And everyone wants their biggest energy sector to be green.
Yeah, absolutely. And there is no democratic debate. It's just one country versus another one.
Yeah, I'm really curious to see what the outcome is going to be, because I was actually really happy to hear that they were considering natural gas and nuclear for the label, because it means that you can put green subsidy on it, and that means it's very possible for all those billions that have been made ready for the transition. Well, in my opinion, nuclear energy is the way, and with that money available for nuclear plants, we could make some real progress. But as you say, there's been fights over what should and shouldn't be included.
For me, all of the green plans sounded very negative and destructive. And then at some point the European Commission said, yeah, but nuclear and gas, that's also green. And we're like, okay, but it's a completely different story.
Right, yeah. Okay, so let's start talking. Right?
Yeah.
No, it's really weird. But I am a bit afraid that it will probably be excluded in the end, because I feel like there's such a strong wind and solar energy market or a lobby being put into existence in the past years.
Especially Germany, which has shut down has shut down or is shutting down their nuclear plants. That would be a big blow to them if that is now considered green.
Yeah, but for France, of course, it would be equally
of course, yeah.
Because they have like 70 or 80% of their electricity is nuclear. So that's why I said I'm really curious to see how it ends. But I'm not willing to place my bet on one or the other.
And then there is also the geopolitical aspect of Nord Stream 2.
Yeah.
So just to give some background, you have the Nord Stream 1 pipe which goes from Russia to Germany and which can supply us with natural gas from Russia. And now we are also building the Nord Stream 2 to increase the capacity. And it's just the last stretch which has not been completed.
And now we're all in the cold.
And now it's very contentious because it's being linked with the whole situation in the Ukraine, with the West saying, okay, but if you continue to escalate, we might not finish the Nord Stream 2.
It's easy to say if your house is properly warmed at all gas prices, but it's something that we will only damage our own economy with, of course, and Putin knows this better than anyone. So it's a very funny situation. That is,
absolutely. On the other hand, Putin is also, I think, not as strong as he seems.
No.
He made some ultimatums to the NATO that they cannot expand anymore. They cannot put their troops in any of the Eastern European members of NATO. To which NATO answered, we're never going to agree to those terms. So now the ball is firmly in his court. I mean, is he going to be able to retaliate or not? It's a bit...
I'm also not sure. I think it's really being hyped up at the moment, and almost drums of war are being beat. So everything that he might do will always pale in comparison, and we'll sell it as a victory for us because he didn't really do anything. And I can't see like a large-scale conflict in Ukraine. Can't see it happening myself. So it's probably just a standoff, and let's see who has the longest breath.
Who blinks first?
Right, and well, February is the coldest month, I think, the first few weeks. And after that, time is not on Putin's side, of course. So he'll have to, if he's going to do something, it has to be now while the gas prices are so high because of the cold.
I think he will have to do something militarily, but he will try to make like a limited operation.
Yeah, that he knows he can't expect like a huge counter reaction.
However, I mean, you can start something, but you don't decide when you finish.
Yeah, it might get out of hand. How are we going to respond? At the Crimea, we were very timid and weak when we responded. So maybe we'll not do that again, and it'll just escalate, right, to warfare in the Black Sea.
Yeah, absolutely. And I mean, there's also the internal politics, which is very important, with, of course, Putin trying to bolster his popularity in Russia, but also Joe Biden in the US, who is also in dire straits in terms of his popularity.
Right, it's lower than Trump's at his time in the office. So
Yeah.
they're both looking to score.
Yeah, Biden is being blamed for the inflation, which I think is unfair because it has been taking place for many decades. I mean, it's just now that it's really
It's coming up, yes.
coming up,
But politics will be politics, right? So.
absolutely. And as Bill Clinton once said, it's the economy, stupid. Bill Clinton, I think, the last U.S. president who actually balanced his budget.
That,
Yeah, he was the last one to balance the budget, and ever
Right,
since
yeah.
then there has been huge deficit. So
oh, it's been possible. So why not, right?
yeah, so yeah, we're still following what's going on, but yeah, we don't really have a solution.
Yeah, I'm not sure if we're gonna be ahead of the curve on what happens in 1 year
No,
because
no,
nobody
no.
really knows anymore at that point. What a wonderful time, right?
Yeah, exactly. And yeah, as with Germany in the 20s, the sad part is that such a scenario can continue for many years. So the German mark started to lose its value in 1914,
Yeah.
and it took up until 1923 before it like died, and they had to come up with a new
Yeah.
system.
They
but-
actually fixed it.
Exactly, but it can take years and years before a real solution is.
Well, I think it's the case for us as well. People are not going to admit that monetary policy for the past 10 years has been a disaster. So we're just going to go on steadily. Let's see what happens in the coming year.
Yeah, but just one positive remark. It's always darkest before sunrise. Yeah?
Right. That's very true. That's very true. We're gonna see that interest rate hike eventually.
So yeah, stay sane, everybody. Podcast now also available on Spotify if you want to listen to it while you're driving or while you're doing the cleaning at home.
Follow it for sure.
Exactly. Also at Fire of Europe, still coming with new articles. I actually wrote a new article recently about RT, the Russian broadcaster,
Mm-hmm.
who actually tried to open a German language TV station, which would also broadcast in Germany.
Yeah.
And the German government has said, okay, here I'm drawing the line. You know, if you want to have your YouTube channel in English to influence people, that's okay.
Yeah.
But like a German language television channel on the TV, which is distributing the Russian propaganda, I mean,
it would hit too close to home.
exactly. So that's also very interesting. Like, where are we going to draw the line in terms of foreign?
What are we gonna allow? Yeah.
Exactly.
I mean, it's a very bad development that we're rejecting any kind of information we consider wrong. It's just open censorship at this point.
I think the decision which we need to take is that we have freedom of speech, but not for foreign state actors. I mean, there should be some limit there.
Well, yeah, but you know, it's Russia today,
Yeah.
and everybody knows it's Russia today. So if people choose to listen to Russian state propaganda, I think they should be allowed to listen to Russian state propaganda. Many people consider CNN the same, but only the American version. Sure, it would be weird if CNN made a German language version that they would broadcast there, but who are you to say it's illegal? That it's like a state actor, you know, actively inserting propaganda instead of just a foreign.
That is a fact, right? I mean, it is an
Yeah,
arm
they're
of
connected to the Kremlin.
yeah, it's an arm of the Russian government. which
Yeah,
is,
every big entity in Russia is in the end. I think that we should approach those issues more with like open skepticism rather than just banning it outright.
All right. Well, we won't fully agree, but that's not necessary.
That's not necessary at all. No.
We can all have our own opinions, but if you want to know more, please check out the article. Do you have any further topics which you would like to address?
No, I think I'm good.
All right. Then, yeah, I would like to thank you very much for your time and the interesting discussion.
Thank you too. It was
And
fun again.
we'll stay on top of it.
Definitely.
All right, to everybody listening, like I said, stay sane, and I'll see you next time.
All right. Till next time.